Welcome to the 30-minute hour. It's the personal development podcast for the seven-figure entrepreneur who's looking to level up and become unstoppable. I'm your host, Eric Twigg, your procrastination prevention partner. Joining me as always, you know him as the super CEO, the business strategist extraordinaire, and all-around good guy, Ted Fells.
Happy Monday.
That's right. It is indeed a happy Monday. You know why it's a happy Monday? I'll tell you why it's a happy Monday since nobody knows. There was that awkward pause there, awkward silence. So I have to tell everybody why it's a happy Monday. We're going to talk about how to build and protect generational wealth. That's right. That's why it's a happy Monday. And here's the thing, like you may not have come from generational wealth. Like your last name may not be Kennedy or Rockefeller, but the bottom line is that generational wealth can come from you, especially if you listen to what our guest is going to share today. So definitely, this is one you want to pay close attention to. But this certainly is not your everyday podcast. We do things a little differently. Ted, we neglected to warn Whitney of that backstage.
I'm in. Whatever we're doing, I'm in.
She's in.
No, that's good. So definitely, in addition to LinkedIn, YouTube, and Facebook, where you can watch us live or go back and watch the recording of us doing the 30-minute hour, you can also go to Apple Podcasts and Spotify and listen on the podcasting platforms. And we've got over 1.2 million total downloads and counting. So definitely make sure you find us there and make sure you hit the subscribe button. That way you never miss a future episode. But again, we're here today to talk about how to build and protect generational wealth. And our guest has a proven roadmap to help you to get there. She's the director of investor education at passiveinvesting.com. She's the founder of ashwealth.com. She's the author of Money for Tomorrow, How to Build and Protect Generational Wealth. She's the co-author of the international #1 bestseller, Resilient Women in Life and Business. And she's the host of the Passive Investing Made Simple podcast.
Boy, Whitney, you pretty busy.
I got nothing going on. It's a big
Yeah, you pretty busy.
She is somebody, let me tell you.
She is somebody, Eric.
For sure.
I
So
don't
please,
think so.
so please join me in welcoming to the 30-minute hour, Whitney Elkins Hutten.
Awesome. Thank you so much for having me on. I love the energy. This is going to be so much fun.
Yeah, looking forward to it. And I think this is definitely a topic that, we all need, right? As business owners, as entrepreneurs, we need to be thinking about generational wealth. And we think about the names I mentioned before, these people that you think about as having that generational wealth. You think about a professional athlete, but I think it's possible for the business owner who structures things right. And you're here to talk about that. But I am curious. I want everybody to kind of have the backstory perspective. Like, how did your journey into this field of wealth education, how did that begin?
Completely by accident. So I started off in 2002. I bought a house with a significant other, and the relationship fell apart about a month later, and I had the house. And everything was under my name, the mortgages, utilities, everything. And quite honestly, I thought the house was going to sink me. So I stuffed it full of roommates. It needed a rehab, completed the rehab on the property, and 11 months later sold the property and made more money in that one transaction than I did in my day job that had me traveling quite a bit, sometimes upwards of 80 hours a week. And so that was like my first kind of foray into, wow, I can actually generate income outside of my day job. I can generate it in my nights and weekends, kind of like a side hustle on my own terms. And it's actually not attached to how many hours I traded. I'm not trading time for money. And so that was like, a huge realization for me. Not only that, I had outsourced all my principal, interest, taxes, insurance, and my utilities to my roommates. And I was providing value in doing that, right? It wasn't like I was robbing them of money. I was, providing value in their lives with clean housing and stuff like that. And I was like, wait a second, I think I might have stumbled onto something here. And so I continued to, invest in real estate, live in flipping and house hacking is what the term is now. And then, got really good at building up equity, really bad at building up cash flow. And I just didn't have the roadmap for generating, even at that time, the term wealth wasn't something I was striving for, just freedom in my life. And I was like, how do people do this? And so tried building a business over here, tried to climb the corporate ladder over here. And I'm like, you know what? This real estate thing really has something here for me. If I could only figure out how to get it to pay me monthly so I could actually buy groceries with that income. And so I started unlocking some of these little mysteries and mostly copying what other people around me were doing, people that I knew, loved, and respected. And watching them how they were growing their wealth. And that's when I, started scaling our portfolio, got to 36 single family rental properties, then bought a 52 unit apartment building in partnership, then got into larger capital raising efforts into multifamily. And then, fast forward to where my husband and I both are at today, we have a portfolio of over 6,500 multifamily units, 2,200 self-storage, and 15 car wash. But it started all with that first house. And really, it's not the numbers, it's what all that gives us, which is the income, the consistent income, the capital preservation, feeds into our financial freedom. So that's my wealth building journey. The book really comes out of all of the blueprints I was trying to piece together, all the different information along this 22-year journey, and also all the hard things that I was learning, all the mistakes, the missteps I was making, my family was making as they are, navigating, some of my family members in their end of life journey. So that's really where the book kind of comes together.
Whitney,
Wait.
Did you say 6,500?
I did.
Wow. I thought she said 6,500. Man, you're doing all right, Whitney.
Well, thank you.
See?
Yeah, but I mean, that is not to jump ahead, but that's one of the things that I wish people knew is that if you want to build, wealth, business and real estate are two of the most common ways to do that. People that really grow generational wealth, and in both, you have to rely on relationships to help you get there.
Mm-hmm.
And that is, that those 6,500 are largely in partnership with other operators, other general partners.
I'm just fascinated by the backstory. This all started because of a relationship that didn't work out and you being stuck with the house. And I would have to imagine at the time, you're like, man, this is the worst thing ever, right? Oh my gosh, I got this house. What am I going to do? But it ended up being the best thing ever. I mean, I'm just curious. Do you think you would have eventually gotten to where you are now had that not happened one way or another? Or was that just literally the pivotal turning point?
I can't answer that question. I really don't know. I mean, I would like to say at some point in time I would have figured it out, but the part of me thinks I probably would have fell just into the traditional American narrative, which is go to school, get a good job, get married, buy a house. And that's the trajectory I thought I was on. But when this relationship fell apart and we did things a little out of order, we weren't married or anything like that. We bought the house and then thought we would get married later. And when the relationship fell apart, I was forced. It was a forcing function for me to try to figure out how to not have it foreclosed on. And to be quite honest, I don't even think that, I think a lot of people, they have fears of getting into situations because they think they're, something drastic like that. They're going to become alone and die, right? Their head just goes that way to protect them. When in actuality, I could have just sold the house as is and gotten out from underneath it. But for me, I was like, how can I pay my bills? That's all I wanted to do was pay my bills. So I stuffed it full of roommates and I'm like, okay, what next? If I'm going to sell this for a profit. I have to do the rehab, which means I got to get those psychedelic daisies that were painted in the 1960s on. Lord knows what that person was on when they painted them. I need to get those things off the wall. That green shag carpet's got to go, right? So yeah, just kind of, roll up your sleeves and start solving problems one after the next.
Wow.
Yeah, I think that one of the takeaways is that everything happens for a reason, right? We think these things that happen to us, we experience that are painful at the time, or they're just negative, but that could really be what you need to get to the next level, to get you to your next level. So no, that's incredible. That's incredible. So like, if you could go back to when you first started this whole process, when you sold a house, now you're saying, oh man, this could be more than I thought. And like, knowing what you now know, if you could go back to that beginner version of yourself, what advice would you give?
Ooh, I'd probably transition into holding the real estate as opposed to flipping the real estate. I probably would have held for longer, generate that cash flow earlier in my life. I would have, for me, you have to think about this, like how I grew up, and maybe is the family I came from, or maybe just being a woman, and we were taught to be independent. I need to do this myself. I can only, and I just had a relationship fall apart. So that the world was confirming that for me right at that point in time. I need to do this myself. Long story short, I wish I would have gotten into partnership faster, learn to ask for help, learn to engage the who to help me to get to where I wanted to be. Not only me trying to figure out how to do all the drywall myself and the electrical and the plumbing, right? And then from a mechanic standpoint, I would have figured out not only how to get cash flow from the rental sooner, but also always keep the roof over my head as an income producing property in some form or fashion. Because I think that is a power that I don't think most people really realize, is that the roof over your head, maybe you're at the stage of life where you could always have a roommate to help you offset some of the bills. Maybe you can live in a multi-unit where you're living on one side and, other people are living, in the other units. Or maybe have a mature, family, like you have a spouse and kids, and maybe you can have like a mother-in-law unit on the back. You can always have another stream of income coming in on the property as well.
But I think it just goes back to, why we just think a certain way, right? Whether it's just, I'm going to go to school, I'm going to get a job, or I'm going to live in this house, and but it requires like a rewiring. You literally have to be open to thinking differently than you would have normally thought.
Well,
absolutely.
Oftentimes, I think that's thinking in a real safe manner, right? It's kind of a real kind of proven, go to school, get a job, get a house, get married, versus what happens if something happens, right? The what if, right? What if the person, the situation doesn't work out and now you're in this house, or, what if you lose the job, or, something that, requires you to, come up with a plan B or plan 1A.
What if it worked out and you got to build the life you wanted?
Yeah, there's that.
Yeah.
There you go. No, that's a great question to ask. If you're in that moment of decision, and sometimes what's best for you may not be comfortable in the initial moment, but you'll look back and be grateful for it. And I'm just curious too. So you're the founder of ashwealth.com.
Yes.
Let's talk about that. So who is your ideal customer, and how specifically do you help them?
Yeah. So, and this kind of goes back to also the book Money for Tomorrow. I work with two camps of people. Both of them are investors, either aspiring investors, somebody who's starting off on their journey and they're trying to accumulate maybe their first down payment for a piece of real estate, or they're trying to figure out how to, acquire other investments in business, or maybe stocks, bonds, and mutual funds. We start building their financial foundation from a solid aspect the right way from day one to get them to the point they can invest. Okay. And then two, the other investor is somebody who's probably further along in this journey and then went, wait a second, do I have all my ducks in the right order? Like, I feel like I can have more money to invest right now, or I'm losing a lot to taxes and to fees. Like, I don't understand why. Like, why is this happening? Or maybe they got invested into the hot tactic at the time, like a short-term rental here and a midterm rental there, and then opportunity zone over here. And they don't really fundamentally understand how to invest based on principles. That's the other type of investor. So in both camps, I'm helping both of those investors understand the wealth game. What is the objective of winning the wealth game? Okay, especially generational wealth, but it's to do what you want, when you want, with whom you want. Okay. Then I help them understand the rules of the game. So if you're playing Monopoly, you got to understand the rules, right? Before you can start understanding the strategies to the game. Okay. So I help people understand the objective, the rules of building wealth, which is you have to learn how to create it. You have to learn how to keep it. You have to learn how to grow it. And then if you're going to win the generational wealth game, you have to learn how to pass it on. Okay. So those are the areas in which I help people, understand how to build their financial foundation from a rock solid standpoint.
So a question just came to mind. So you mentioned some areas: create, keep, grow, and pass it on. Which of those areas do you think is the most challenging for business owners?
Keeping money. So here's the thing: is that each one of those areas is separate skill sets. And for people that are business owners and investors, they get really good at creating money. And then, if they're investing, they're going to get really great at growing money, right? They're eventually, they're going to be chasing tactics all along. The problem is that either they didn't shore up their foundation, they have a leaky boat, they have a leaky foundation in which they're building their wealth. Okay. So they violated one of the 6 ways that they need to keep it. Or they're investing in tactics and not in principle, and they're going to lose wealth that way too. So it's really that keeping the wealth that is probably the biggest area that people could focus on. And it's a great area to be focusing on in today's market right now. Is my financial foundation solid? Do I actually know how to invest on principle? Both of those are going to impact your ability to keep money.
Okay. All right. And so, what are some of the common mistakes? And it could be around keeping money or any of these areas that you see business owners making that they need to avoid right away.
Well, so there's 4 common mistakes that I see people make, but then we can dive really tactically and name those 6 areas that somebody needs to keep their eye on, right? So mistakes that I see a lot of investors, a lot of business owners make is that they stop tracking their business expenses. They stop tracking their portfolio. Okay. Which means if they stop tracking, right, they just think I'm beyond that. I don't need to do that anymore. I've graduated. I've gone to the next level. Well, if you're taking your eye off the ball, you're now out of relationship with your money. Maybe it's the money in your business. Maybe it's your own personal wealth, right? So you're not giving every dollar a job. And that gets really dangerous. That's where we start losing money to these 6 areas, meaning it's getting, maybe you're losing it to interest debt. Maybe you're losing it to poor use of insurance. Various fees are creeping into your portfolio. You're losing it to taxes, Most business owners and real estate professionals hate paying taxes. That's why they got into the game, right? If you are a personal investor, if you're scaling your own investment portfolio, at some point in time, you've got to worry about the tax implication from provisional income. And then a lot of people don't think through planning for their incapacity. That's another big mistake. So when we talk about the ways of keeping wealth, those are 6 huge areas. And then we can dive deeper.
Yeah, can we go? Because I think the 6 ways is a critical piece here. Can you touch on that again? I just want to make sure everybody gets this.
Yeah. So making sure that you understand how to leverage debt appropriately. So you can either get paid interest or pay interest. Now, if you're paying interest on an asset that is going to generate wealth for you, like a piece of real estate, like a loan for your business, okay, we may not want to get rid of that debt. But most of us have a lot of consumer debt or debt that is unsecured and really isn't generating that much income for us. Maybe it's credit card debt, personal loans. Heck, we just got rid of a loan on a travel trailer that we just purchased. We want to have a methodical way of getting rid of that debt. And it's not as simple as getting rid of the highest interest rate debt first or the largest payment. We want to make sure that we're calculating which one is going to create the most impact. Two, okay, the second one, leveraging insurance. When we get insurance, we're trying to outsource our liability, okay? And so most people try to get the cheapest policy that possibly can on maybe their health insurance, car insurance, home insurance, right? We actually want to make sure we're getting the most appropriate coverage for the costs that we are spending, meaning that we want that insurance there for us, making sure that it's working for us should we suffer a loss. With our house, with our health or something like that. But think about, like, if you're a business owner, do you have your income in your business protected? Do you have a disability insurance? If you're working at W-2 or self-employed, make sure you have disability insurance. That's also going to help protect that stream of income that you're bringing in that most of us rely on, until we reach financial freedom. And then also just umbrella insurance. How do you coordinate all these policies together? So those are just kind of a few ways to think about leveraging insurance. And the biggest thing here is, again, most people try to get the cheapest policy possible. But even once they secure a policy, say like on their home, they don't update it. And so if you go 3 or 4 years without updating your insurance and your house is, compounding growth at 10%, maybe even 6%, and you suffer a catastrophic loss, you'll be coming out of pocket for tens of thousands of dollars to make up that gap. All right. So where were we? We're at insurance, taxes. So making sure that you're working with a tax professional to help you understand, especially if you're a business owner, you have so many ways to lower your tax liability. You get to use deductions. There's a laundry list of deductions. One of the most powerful ones being depreciation. So make sure you're working with a tax professional to help you do that. You get to utilize entities, okay, to lower your tax liability as well. If you, instead of being a solopreneur, can you check the box as an S Corp? Okay, an S Corp LLC. Okay, that'll help, shave 20% tax saving right off the top. Work with a tax professional on that. Then can you hire your kids or dependents into your business? And shift income to other tax brackets that have 0% taxation. So like my daughter, we hire her into our camper van rental business. She does a lot of the cleaning and the restocking. We pay her for it. She now, in turn, when we pay it for her, we get a business deduction. She gets that income tax-free. Okay, but it doesn't stop there. Okay, she can pay for some of her own stuff, like extra clothes, magazines, whatever she wants, toys. She can pay for that. We didn't pay taxes on it. Or she can put that in a Roth IRA at age 11 and allow that it went in tax-free, it's growing tax-free, and it can come out tax-free when she retires. So those are just 4 of the 6 ways that you can really impact and keep a lot of your wealth.
Well, that's good stuff. I know the taxes, that's a pain point for many business owners. When you said tax, several of the people listening to us now just felt that pain point.
Well, here's another one, because we're mostly trained to defer our income into a qualified retirement plan, even as business owners, right? IRAs, 401ks. Here's the thing. If How many people, I wish we had everybody could raise hands, like listening to the show live, plan on retiring with more than $500,000 in your retirement account? I do.
Yeah.
You guys?
Absolutely.
Okay, guess what? You're now going to pay taxes. Not only are you taking that out, you're probably going to trigger something called provisional income, which could trigger a double taxation on your Social Security. Up to 85% of your Social Security could disappear to this double taxation called provisional income. Okay, so these are some of the things, but the 1%, the wealthy, understand how to sidestep all this, right? So these are the things that we can be working on now. And we touch on that in Money for Tomorrow as well.
Okay. Now, this is excellent information. You definitely want to keep your money. So what are some other steps that our followers can take to build and protect their generational wealth?
Well, I mean, if they're, business owners, they're probably getting really great at creating the money. Shift that into as passive of stream income as you possibly can. We just went over all the different ways that you can keep it. Learn how to grow it too. Diversify outside of your own business. Okay. Learn, pick up other, passive investments and other type of business operations, maybe some real estate, maybe the stock market, right? Don't forget to diversify your portfolio. One of my clients, they're extremely successful business person. However, over 98.2% of their wealth is tied up into their own business. So that's a huge bet to take on yourself. That's amazing. Okay. They're in control of that, but they're also their single point of failure. If what happens, they become incapacitated. So we're working right now to put systems in their business. One, so they're no longer a single point of failure, but two, ways to take some of those streams of income out of the business and diversify into other areas. So they have a well-diversified investment portfolio, and then learn how to pass that wealth on. Okay, so passing wealth on isn't just as simple as having a will or a trust in place. You also have to make sure that you've planned for your incapacity. Like, should you slip, trip, and fall and suffer a head injury and are in a coma for like a couple of months, do you have the right documents in place now, like a living will, healthcare directives, power of attorneys, so your health doesn't drain your wealth? Obviously have the wills and trusts in place. That's going to tell the courts what to do should you pass away. But train your heirs too. Like, who's taking charge of your estate after you pass away? Okay, are they trained? I think business owners are well attuned to this. They bring their kids into their business. They train the kids to take over the business. Do the same for your other holdings as well. Train the kids not only how to mechanically take over the business, but what are those values? What are those traditions that you want to have your family continue to build upon after you pass? What is that legacy that you're passing on?
Yeah, I think having the conversation is critical. I think some of the business owners just don't like talking about it because it's not
sexy.
No. But it's not sexy, but it's definitely necessary. So you're the author of Money for Tomorrow: How to Build and Protect Generational Wealth. So how is this book different from just some of the other books on a similar topic, on the same topic?
Well, this is the book that I wish I had whenever I was starting off on my wealth building journey. Like when I, sold that house back in 2002, like what would I do with the money? How would I grow this? And so that is huge. One, I designed it as an end-to-end roadmap. I actually wrote it for my daughter because I didn't want her to go through trying to piece together all these things that I had pieced together over my 22 years of investing. I wanted her to be able to build upon what I've built and go make her own mistakes, quite frankly. So, essentially stand on the shoulder of giants.
Well, that's great. All right. So I know you get asked a lot of questions from various business owners and even on other shows. Like what's one question you never get asked that you wish people would ask you?
Ooh, So I actually got asked a really intriguing question the other day, because this person heard me on a podcast and they were like, you always talk about like, what would you do if you started over? You'd probably start over the exact same way that you did, but make a few tweaks to your timeline. They were like, what would happen if you ever somebody just gave you $2 million? Go, like, how would you allocate your portfolio? And I was like, really kind of taken aback. And I was like, huh. I sat there and I thought about it and I kind of gave my what I was thinking in the moment. And then I went back to and looked at my like current allocation. I'm like, that's pretty much like how I'm allocated right now. I'm like, hey, I did it.
Oh, wow. Okay. Now that's awesome. That's awesome. So what's next on the horizon for you?
Yeah. So for me, it's continuing to mentor people in this space and help them how to navigate the current markets and scale their investments. Right now, I think there's a lot of fear of what's the Fed going to do? What's going to happen to interest rates? Are we going to go into a recession? And here's the thing: is if you have mastered these principles of creating, keeping, growing, and passing wealth on, you're going to know how to invest in the market, whether it goes up, down, or sideways. Okay. Your plan and your strategy will stay the same. The underlying tactics will change. And that's the crux, right? Most of us have learned to invest based on tactics, like what's going to yield the largest yield at that point in time. And we've forgotten that there's this whole strategy to investing in our businesses, in our investments that we've, largely haven't learned. So I want people to understand that.
I just think it's interesting that we were talking about like the Rockefellers and some of these other names, but the majority of those types of individuals made their money when the times were the worst. It was some type of a recession or some type of downturn in the economy when it's almost like they were zagging when everyone else was zigging.
Yeah, like the Rothschilds. I mean, Baron Rothschild, he said, like, learn to, invest when there's blood in the street.
Yep.
And people, I don't know why the second half of that quote is never published, but the second half of that quote is even when the blood is your own. And so what does that tell you? It's that there are principles that, these wealthy families invest on. They always invest in assets that preserve capital, create cash flow, create equity. Okay. They pull multiple levers of creating equity. They invest in the assets that create tax benefits. They use lending wisely on them. They're inflation hedging. And if they are investing in an asset, they either are the masterful operator or they invest with masterful operators. And here's the thing, even the wealthiest people that I've interviewed today, you look at their investments, 98% of their investments adhere to, 5 to 7 of those principles. So again, if the market goes up, down, or sideways, they're hedged in a certain way to be able to navigate the market.
Okay. And so in addition to the books and everything else you're doing, you also host a podcast, The Passive Investing Made Simple. Tell us about that. What can we expect when we tune in?
Yeah, the Passive Investing Made Simple show is really tied to my work at passiveinvesting.com. And there, we're talking about all things passive real estate. So we'll talk about how to set your goals, understand your risk in real estate investing, the timeline there. We'll also talk about, how to leverage the tax aspects. What do you need to consider from legal aspects? How do you leverage retirement accounts in order to invest? So we're really kind of, running the gamut of the conversation there so people can become a more confident investor.
Okay. And then you kind of share the format. Is it, you bring on guests, it's just you?
Yes. Yeah, we do. It's probably half guests and then half like, kind of more solo training episodes.
Great. Fantastic. All right. So people can listen to the 30-minute hour and they can listen to your outstanding podcast, The Passive Investing Made Simple. They can certainly check that out.
Yeah.
Absolutely. Good stuff. All right. So we're coming to Ted's favorite part of the show. It's called Write This Down. So this is where we each go around and we talk about at least one takeaway that was mentioned in today's episode that the people need to write down so they can level up. So Whitney, you're our guest of honor. What do the people need to write down?
Well, actually, I want to give something to the guests that I actually haven't mentioned yet. And I guess we kind of alluded to at the beginning of the show is that for all this work, your wealth building journey to work, you truly have to understand the answer to 3 questions. What do you want? Why do you want it? And who do you have to become to get it? And when you're answering that question, who do you have to become? Flesh out the mindset, the skills, and the networks you need to get to the next level. And here's the cool thing. Don't ask this once. Ask it like every 3 or 4 months along your journey until you get to where you want to be. It'll help you. Those 3 questions alone will help you level up.
Wow, that's profound. So what do you want? Why do you want it? And who do you have to become to get it?
Yes.
Write that down.
Yeah, I gotta follow that. I gotta follow that. That's pretty good, Whitney. Pretty good. But you're the star of the show, so that's kind of expected you to drop a boulder like that. My write that down is kind of simple, right? I think about how the conversation started and the situation that you were in, and then how you looked at the glass as half full versus half empty, right? And you figured out, a way to, kind of look at that situation that you were in, come up with a strategy, and then just run with that. And I think that's the thing. I think a lot of times people, you're in these situations and you just bury your head in the sand, right? And sometimes, you got, what you need in order to be able to, to do something great. And yeah, so, I think, not knowing, but that person that, had was in that relationship with, he might be sitting back thinking, man, look at that. Maybe I should have stayed.
My husband's glad he's not there.
Right. Your husband's like, Ted, take it easy. He's up on it, but no. So yeah, just looking at that opportunity, looking at the glass as half full versus half empty, and then kind of come out swinging, which it sounds like you've done. So
write that down. Okay. All right. So my write this down. It just has to do with what we talked about earlier. Just kind of the way you think. And I think we all get programmed for safety, and programmed for what you're supposed to do, and programmed for what the traditional path is, right? Whether it's okay, I just live in this one house. My parents lived in the same house since I was 3 years old, right? But we get programmed, and I think you have to disrupt the programming if you really want the success and you really want to become the best version of yourself. You really have to do things and try things that disrupt your programming, and that's my takeaway just from this episode. You guys, and sometimes you're forced into it, right? Or sometimes you want to be traditional, but life happens. I know of entrepreneurs who started their business because they got fired from their job. And they said, we had a guest on previously that said, look, no, I like working. I like being employed. This happened and I was forced into this other lane. And it turns out that was the lane for me. So I just think you just have to be open. And then I think you have to pay attention to the signs that are out there. And I believe a lot of times God is putting you into certain situations. It feels like it's uncomfortable, but in reality, that's where you are supposed to be.
Yeah.
So write that down.
Write that down. Yeah. I love the quote by Tony Robbins, like, is the world conspiring for you or against you?
Yeah.
And, I always think, and that's such a hard lens. Like, you have to train that, right? It's kind of like, anytime you tell yourself, I can't, if you just switch it to how can I? a different part of your
Mm.
brain switches on. Like it starts filling in the blanks. Oh, you asked a different question.
Yeah.
Let me start like, creating a list for that. A trick that I was always taught, like if you're writing a bullet point list, kind of like a brainstorming session, always leave 2 or 3 blanks at the end because your brain hates blanks. Can't stand it. And so it always will try to fill that in. But if you're working from a construct where everything's already planned out for you, then yeah, you're not going to think outside the box at all. Why would you?
Exactly. And what's easy when everything is happening for you and not just to you, right?
Mm-hmm.
Yeah, that's how you have to think. Yeah, this has been a fantastic episode. I mean, we've touched on just some financial nuts and bolts and blocking and tackling, but we also touched on the mindset and mentality that you need to succeed in any arena. So thank you, Whitney, for everything that you shared and for dropping all of those massive boulders. And how can the people connect with you to get more information?
Yeah, absolutely. If you're interested in getting the book, Money for Tomorrow, How to Build and Protect Generational Wealth, you can find that at biggerpockets.com, Money for Tomorrow, or you can find that at amazon.com, or pretty much any major book retailer now. And then if you want to connect with me, you can find me at ashwealth.com. There I've got a free quiz for people to take to understand what might be your obstacle in your financial journey. And if you're looking for investments, connect with me at passiveinvestingwithwhitney.com.
Fantastic. All right. Well, thank you again, Whitney. This has been a great episode. Thank you for sharing. And then speaking of sharing, for those of you watching and listening, don't forget to share the show.
Share the show.
That's right. Don't keep this great information to yourself. And then also don't forget, you can go to Apple Podcasts and Spotify, look up the 30-minute hour, hit that subscribe button, and that way you will never miss an episode in the future. That is our show for this week. And until next time, have a great one.